needed, I imagine, was a 50 basis point hike in rates. How detrimental will another 50 basis points be?
Well, for our sovereign rating, we look at the monetary flexibility as well, and the hike in interest rate already earlier this year is something we looked at, the new one as well. Monetary flexibility is something that is one of the factors for the sovereign rating, and we are still assuming that ultimately the Central Bank of Russia will transition to a floating exchange rate, but the financial market volatility in Russia has possibly created an issue for this transition to a floating exchange rate. So from our perspective, we're currently, we continue to monitor the situation and the behavior of the central bank.
All right. Russia, the economy minister, has said that your move, the S&P move, was partially motivated by politics. What's your response to that?
Well, we are politically neutral. It is our job to inform investors on our view on creditworthiness of a government or of corporates, of banks. We don't have any political agenda whatsoever. Our sovereign ratings are according to globally consistent, transparent, published criteria. And we look at economic fundamentals. We have no political agenda.
But the politics, the context of this story, the critical context of this story plays into this decision-making process somehow, no?
Well, the geopolitical situation, of course, has an impact on certain economic fundamentals, on Russia's external position. For instance, we've seen substantial capital outflows out of Russia over the first quarter, more than $50 billion US. By comparison, the average annual outflows over the past 5 years or so were $57 billion per year. That compares with the current account surplus that we expect to stand at between $10 and $15 billion overall for 2014, and that we think these capital outflows they are a consequence of the geopolitical tensions. Yes, so there is an impact, of course, on the economic fundamentals.
Sorry to interrupt. Let me put the question a slightly different way. Is it sanctions themselves or capital outflows that are key to the rating?
Well, the immediate trigger point is the capital outflows. The sanctions can have an impact on capital outflows. The sanctions can also have an impact on foreign direct investment into the country, and the sanctions can more broadly have an impact on GDP growth, on economic growth, and that was one of the other reasons why we downgraded the sovereign rating, the risk to the Russian growth outlook. So it's the effect of the possible sanctions on a variety of economic fundamentals.